Here we are. Brilliant. Welcome, guys. Welcome to the pre-market overview. Today's September 1st. Today is the start of a new month, so happy September, I guess, and happy Tuesday as well. Let me just move that to say that we're live. There we go. So welcome to the pre-market overview. For those that might be newer to it, just to let you know, my name's Becky. That's me there. My email address is becky@tradictive.com. So if you have any questions about what we cover today, you can email me on that. No problem. There's also the support team. Now, the support team are a team, so obviously there are many more of them on that email address. So normally quicker responses come from the support team. So support@tradictive.com would be what we would normally recommend if you want to get a quicker answer. But of course, you are welcome to email me directly as well. So just to explain again, for those that would be newer to the pre-market overview, what this is, what's the point, what do we do? So basically, every day we send out a newsletter. And that newsletter is every day, Monday to Friday. That newsletter covers 4 of the major markets in the world. And we talk about where we think the markets are going, how long we think they're going to go in that direction for, where we think prices could turn, volatility and news as well. It's covered in a 2-document newsletter. So we do the pre-market overview to just expand on it a little bit more, explain a bit more about what the newsletter means, the technology that we've used, how we've come to those conclusions, so that you've got a bit more of an explanation behind it. Okay, so for those that are joining us from within Tradictive, just to give you a reminder, so today is Tuesday, I had to think about that. Tuesday, meaning we have stocks at 9 a.m. and then investing at 1 p.m. Eastern. So for those joining us within Tradictive, hopefully we'll see you on those sessions later today. Obviously, normally Mondays, Wednesdays and Fridays are futures and options. And then over the weekend, we have sharpening sessions, one of which is a psychology session and one of which is a methodology reinforcement session. In terms of upcoming live courses, this is where we go through the foundations upwards in either asset classes or in specific concepts or skill sets around trading. The next one we have is the backtesting class. I teach the backtesting classes, and it's where we teach you how to take any methodology and collect data from it from the past in order to prove whether or not it works in a more efficient way than just waiting for real time to pass, waiting to collect trades in a simulated environment that could take months. You could do it back tested in a much more efficient way. So we teach that. That's September 19th to the 20th, 2 p.m. Eastern. After that, we have futures at the end of the month, and stocks at the start of October, psychology middle of October, and trading plans towards the end of October. So you've got those dates there. Now, I need to put up the disclaimer. Obviously, it's important that you guys read this. I'm not going to read it to you. It's a long one. It will take me a while. So, of course, you are welcome to pause the video and read it if you want to do that. Come back to it later and watch it and read it. You can mute me if you'd like, if you want to read it now. Or, of course, you can go to the website, which is www.youcantrade.com, and you'll get additional disclosure information there. In a nutshell, effectively what the disclosure is saying is that there is, of course, a risk involved in trading, and that you need to be comfortable to take on that risk before you trade, but the risk is yours. The choice is yours. What we do is we show you ideas and demonstrations. It's not meant to be trading tips or advice. It's all educational content. Okay, so now that that's done, let's get into the newsletter and I'll show you guys what we're talking about. So I've got the newsletter here on the right-hand side. Hopefully you guys can see it okay. Maybe if you're on a phone, it might be a little bit small, but hopefully you can see it okay. So you'll see what we do on the newsletter is go through 4 of the major markets in the world. We have the S&P, which is one of the major equity indexes in the world, or indices. We have oil and gold, obviously both huge commodities. And then we have the euro. Now with the euro, when we look at the euro as the euro versus the US dollar, that is the highest traded currency pair in the world, and spot forex is the highest traded asset class in the world. So lots and lots of volume goes through just that market by itself, let alone the other major markets that we've covered here. So even if you don't trade these markets directly, I'm sure a lot of what you trade will be correlated at least to these major markets, so that should help you out. Then we have here under time frame, you'll notice that we are looking at a daily chart for each of these markets. Now, of course, different things happen on different time frames. So if you trade much smaller time frames or much greater time frames, of course, there'll be a difference there. But the daily does seem to fall within what most people do. Whether you're a short-term trader, long-term investor, the daily chart is often used, and that's why we use it. Now, for each of these markets, I'm going to go through and I'm going to show you the climate. Climate basically means trend. It means what direction is the market going in, what is the market environment, and more importantly, what are the probabilities associated to that. We also want to understand propagating, which basically tells us how long can we expect to keep going in that trend for, or keep going in that direction for. On the right-hand side, we see what the AutoClimate app is showing us normally happens. So how long a market normally goes up for or normally goes down for, depending in which one we're in, up or down. So this gives us the statistical likelihood, the probabilities of how long a market goes in a particular direction. And then on the left-hand side here, this tells you where we are now relative to that. So again, it's giving you the statistical probabilities as to whether or not we're likely to see a continued move in that direction, or whether we might be coming to the end of that move and starting to see a change in direction. What we also want to understand is nearest UFOs. So UFO stands for unfilled orders. And what that means is where we expect there to be big stacks of buy orders in the market that could push it upwards, or big stacks of sell orders in the market that could push it downwards. We want to use our Auto UFO app to find that on a chart for us and show us where those stacks of orders are. So they show us that by either being a green UFO or a red UFO, buy or sell. So we're using technology to find for us and to analyze market data for us and give us statistical probabilities as to where markets are likely to go. Now, again, just because it's probable doesn't mean it's definite. Of course, things fall outside of probabilities. So we need to manage our risk, of course, every time we trade. But again, it's just about putting as many odds on our side as we can. So for each market, we'll look at those things. So climate, propagating nearest UFOs. We'll also look at volatility. So volatility basically just means how far we expect price to move within given periods of time. Now, the current implied volatility numbers, this column here, these are all percentages and they refer to the expected movement up or down in 1 year as a percentage of its current value. So if we understand what the movement is expected to happen in a year, then we can reverse engineer that and understand what that looks like per day, up or down, per week, up or down, or per month, up or down. So I'll come through and I'll go through each of those numbers. Once we've done that, we'll come through and look at news that's coming up today that we need to be aware of. So lots to do. We're going to start with the S&P. So that's this one here. We're using SPX.X. That's the symbol on TradeStation for the index. So this is what I have here on the left-hand side. Let's just move that about a little bit so we can see what we need to see. There we go. Okay, so on the bottom here, we have our AutoClimate app. So the AutoClimate app tells us one of three things. It can show us a thick blue dot, like we see in this example. A thick blue dot tells us we're in a confirmed upwards climate. So the market's in an upwards direction, upwards environment, upwards direction, upwards trend. But more importantly, it has probabilities to the upside. The dot is thick, so that's how it tells us there are probabilities. It could be a thick red dot. Second one, thick red dot, which tells us that we are in a confirmed downwards climate. We have a movement to the downside, market direction to the downside, trend to the downside, but more importantly, probabilities to the downside. Or it could show us a thin dot of either color. The color still tells us the direction, but the fact that it's a thin dot is the AutoClimate app's way of telling us that there are less probabilities, less statistical advantage. So most of the time as traders, we're going to choose to do nothing on those markets on those days because we don't have statistical advantage. We've got enough against us in these markets. We don't want to be trading against probabilities. So we use the AutoClimate app to give us the direction and the probabilities associated. So confirmed upwards climate. In terms of orders, in terms of the stacks of orders, the UFOs, we see here our closest green UFO here is 3485.14 to 3468.35. That's the closest stacks of buy orders that's highlighted to us there on the chart by our green UFO. Now, you'll notice here, we have no sell UFO on our newsletter because there are no sell UFOs. We're pretty much at all-time highs. We have no price really above us, which means we have no evidence of sell orders above us, nothing for the app to analyze. And so we leave that blank for now. All the while there aren't any sell UFOs, we can't tell you that they're there because they're not. So that's the S&P. Now, we see here that we had a confirmed upwards climate. We show you that on the newsletter by being a green upwards arrow. Now, when it comes to how long we can expect that market to continue to go up, we look at these figures, propagating. So the number on the right tells us that the S&P normally goes up for 10 candles on a daily chart. By the way, wherever that decimal place is on the numbers on the right, I'm going to round it up. So I'm effectively adding one to each of these, okay, rounding it up. So normally the S&P goes up for 10 candles, and we're on candle number 23. So we are quite overextended there as to what is normal in this market, what is likely to happen in this market. Now, bear in mind, the more something goes past what is probable, the less probable it is, the less likely it is to happen. The more you pull an elastic band, the less likely it is to allow you to keep pulling it, and the more likely it is to contract. So the longer we go past what's statistically likely, the less probabilities we have that it's going to continue to happen. So yes, with the S&P, we have a confirmed upwards climate. That's true. So we probabilities to the upside. We have buy orders beneath us and no sell orders above us. Those are all signals to the long side, to the upside. But we do lack probability of a continued move to the upside. So bear that in mind. Now, when it comes to volatility, what we expect in terms of movement on the S&P, we look at the VIX, VIX.X, and we see from that we would expect a movement up or down in 1 year of 25.65%. So what that means is in 1 day, we expect a movement up or down of 56.56 points. In 1 week, we expect a movement up or down of 124.51 points. And in a month, we expect a movement up or down of 259.18 points. Okay, so that's the S&P. Let's move on to the next market here. We're looking at CL. That's the continuous futures contract here for oil. So I'm just going to squidge this down so we see what we need to see. We've got to squidge it a little bit on oil because we're quite far away from stacks of orders. So we see down here, we have a thin red dot. It might be hard to see. There's kind of a reason for that. It's thin because there is a lack of probabilities. So yes, it's red, which tells us it's a downtrend or a movement to the downside. But again, it's a thin dot telling us less statistical advantage. So on oil, unconfirmed downwards climate. We show that here on the newsletter by showing you a red arrow, but it's got a little cross next to it. That little cross is our way of telling you it's unconfirmed. Now, when it comes to orders, stacks of orders close to us in the markets, we have these stacks of buy orders down here, one on top of the other. The top one is 26.31 to 25.80. Closest stack of buy orders as highlighted by the green UFO just there. Closest stack of sell orders is up here as highlighted by that red UFO, and that's at 53.83 to 55.71. And again, as we can see, we're kind of in the middle here, quite away from either stack of orders. Now, what that means is price could fall very quickly. Price could go up very quickly. We have nothing to stop it either way, especially on a daily chart. Of course, there might be different things on other time frames, but at least what we can see here, there aren't stacks of orders that can stop it moving. So we wouldn't really expect a movement one way or the other. We have an unconfirmed climate. Come over here. An unconfirmed climate. And UFOs kind of miles away from where we're at now. So anything could really happen with oil. We tend to keep away from markets where, again, we don't have statistical advantage one way or the other. Now, when it comes to propagating, normally oil would go down for 8 candles in a row. And we're on candle number 1. So we do have probabilities of a continuous move to the downside. But again, bear in mind, it's an unconfirmed downwards climate. And again, not close to any stacks of orders. So again, most of the time in markets like this, tend to keep away. There are opportunities elsewhere. When it comes to volatility, we look at OVX.X. That gives us volatility for oil. And we see from that, we would expect a movement up or down in 1 year of 32.59%, which means in a day, a movement up or down of 0.88 points. In a week, up or down of 1.95 points. And in a month, up or down of 4.05 points. So that's volatility for oil. Okay, so next market, we're going to look at gold. We look at GC. Once again, continuous futures contract there for gold. Okay, just going to squidge that a little bit. So we have our auto climate up on the bottom here, showing us a thick blue dot. That tells us we're in a confirmed upwards climate. So upwards trend, upwards market environment with confirmation, meaning probabilities there to the upside. Again, we show that here by a green upwards pointing arrow on the newsletter. Now, in terms of propagating, we would expect that normally gold would go up for 6 candles in a row, and we are on candle number 1. So again, we have probabilities for continuous move to the upside as well. When it comes to stacks of orders, so orders that we think could change the direction of price, we have our closest stack of buy orders a little way below us there at 1836.7 to 1825.9. And closest stack of sell orders, it looks like we're on the way up to at the moment at 2039.7 to 2060.8. So when it comes to gold, we're still a little way away from the sell orders there. We have a confirmed upwards climate and probabilities of a continuous move to the upside. So it's looking more to the long side there with gold in terms of probabilities. Again, just because it's probable doesn't mean it's definite. Please do manage your risk. But again, statistically likely there to the upside. When it comes to volatility, we look at GVZ.X or GVZ.X if you're American. And we see from that we'd expect a movement up or down in a year of 24.32%, which means in a day, we'd expect a movement up or down of 30.6 points. In a week, a movement up or down of 67.3 points. And in a month, a movement up or down of 140.2 points. So again, that tells us the movement that we expect there on gold. So last but not least, we're going to look at the last market here, Euro versus the US dollar, Euro USD. Okay, so I need to squidge this quite a bit, I believe. There we go. So for us to see what we want to see, I'm just going to put price a little bit closer together there so we can see our UFOs below us. Okay, brilliant. So we can see here, thick blue dot, once again, confirmed upwards climate, probabilities to the upside. Closest stack of buy orders is this one here, this green UFO, 1.1835 to 1.1762. Just rounded that where it needed to go for the pips. Now we can see we have a whole bunch of buy orders, one on top of the other. Loads and loads and loads of buy UFOs beneath us. Lots of buying pressure underneath us. And we've seen these buy UFOs do exactly what we expect them to do. Here we had a buy UFO, price came back in, touched the buy UFO, went up. Down here we had a buy UFO, price came in, hit the buy UFO, went up, came back, hit the buy UFO, went up. That's what we expect buy UFOs to do. They're stacks of buy orders. We expect heavy buying to push price upwards. And that's what we see working here with our buy UFOs. So again, lots of stacks of orders beneath us to the buy side. We've got a confirmed upwards climate, and our closest stack of sell orders is up here at 1.2344 to 1.2414, and just rounded that to the pips that they need to be on. So when it comes to the climate, we had a confirmed upwards climate, and we see here that normally the euro versus the US dollar would go up for 5 candles, and we're on candle number 2. So probabilities there of a continuous move to the upside for the next few days at least. So again, we're having some signals here to the upside, signals here to the long side, confirmed upwards climate, probabilities to the upside, probability that it will continue at least for another few days to the upside, bunch of buy UFOs beneath us and reasonably far from sell UFOs. Again, manage your risk, but it looks like here probabilities there to the upside, at least for today in the euro. And when it comes to volatility, we look at EVZ.X or EVZ.X, if you want to say it properly. And the expected movement in a year, up or down, is 8.26%, which means a movement up or down in a day of 62 pips, movement up or down in a week of 137 pips, or a movement up or down in a month of 286 pips. So again, the volatility numbers give us an idea of how far we're likely to see these prices move within these given periods of time, up or down. So the climate and the propagating give us an idea of in which direction we're likely to see that movement. And the propagating and the nearest UFOs give us an idea of where that movement is likely to stop and turn around, where there might be stacks of orders that could change the direction of price. So we're using direct forces here. It's all about buy orders and sell orders, and pressure to the upside, pressure to the downside, based on the buying and selling that's actually happening. Direct forces, that's what we mean by that. The most direct thing that can move price is buy orders and sell orders. That's it. Now, of course, there can be many reasons as to why there are buy orders and sell orders. So we do need to also understand indirect forces in the markets that could create buy and sell orders that could change things. So we do need to be aware of things like news that could affect us. So I'm just going to make this bigger now so we can have a look at that. So what we do when we want to look at news, we go to fxstreet.com/economic-calendar. And we filter on that by high impact news and by US markets. Now, of course, if you trade outside of that, you can go to that website and you can play about with the filters there so that you can see what fits your trade plan a little bit better. But for us, we filter by high impact news and US markets. Now, it shows us then what is coming out this week in terms of expected news. Of course, unexpected things happen too. Again, that's one of the reasons why we need to manage our risk. But in terms of expected reporting that could have an impact on the markets, this is where we see that. This is where we see that calendar. So we see for today, Tuesday, September 1st, 10 a.m. Eastern. All these times on the left-hand side, by the way, are Eastern time. 10 a.m. Eastern is when we're likely to have high impact on US-based markets. We have ISM manufacturing PMI coming out. So when the information does come out, you'll see in the actual column, you'll have a bit of data in there. It will fill in. you'll have a number, and it will be either red if it's worse than expected or green if it's better than expected. So you'll see that in that column. Again, bear in mind the news is an indirect force. The most direct things that can move price are buy and sell orders. But of course, just be aware of volatility that could come into the markets as a result of the indirect force of news. Okay, so that's everything for today. So just to sort of round off, a couple of reminders. For those that are joining us from within Tradictive, we'll see you in the sessions today in stocks and investing. If you're not already part of the fund and you want to join us and you want to come in and be in our stocks, investing, futures, options, psychology, sharpening sessions, plus the support as well that you get, you can join us at tradictive.com/youcantrade. Now, I get that there are loads of places that you can learn how to trade, and it can be a bit overwhelming to decide which one actually suits you or works better for you. So you do have free 14-day access. So try us out for a couple of weeks for free. If it's not for you, no problem. You can cancel the subscription. But if it is for you, you've had a good couple of weeks to try us out and know that it makes sense to you. In terms of classes, the upcoming class that we have where we go through foundations up on skill sets that we need in trading and on asset classes and methodology. The next one we have is the backtesting class. So if you go to tradictive.com/backtesting live, you can learn a little bit more about what we do and how we do it on that. And again, we have an offer. Thanks to YouCanTrade, we have an offer at the moment. Register for any course and choose an additional course for free. So it needs to be that the second one you pick is of equal or lesser value than the first one. So go to the website, see what we do, see what suits you best, and see how you can put that together in such a way where you make the best use of that offer. If you have any questions about anything, not just courses or subscription, but on the technology we use or on anything I've covered today, you're welcome to email us support@tradictive.com. We're always happy to help. Otherwise, for those joining us from within Tradictive, we'll see you in the sessions a bit later on. And for those within and without or outside of Tradictive, I will see you tomorrow morning for the pre-market overview in the morning. So I'll see you then, guys. Have a good day. Hope the markets treat you well, and I'll catch you tomorrow. Take care. Bye-bye.